Good morning. Welcome to the market opening bell on Wednesday, April 23rd. After the Easter holiday, Hong Kong stocks trended upward with volatility. The Hang Seng Index opened 91 points lower, dipped 204 points to a low of 21,191 in the morning, but rallied in the afternoon to a high of 21,592, up 197 points. It closed at 21,562, up 167 points or 0.8%. The Hang Seng China Enterprises Index rose 53 points or 0.7% to 7,950, while the Hang Seng Tech Index gained 11 points or 0.2% to 4,899. Total market turnover was 251.3 billion Hong Kong dollars. In mainland China, the Shanghai Composite Index extended its 9-day winning streak, briefly surpassing 3,300 to hit 3,311 and closed at 3,299, up 8 points or 0.3%. The Sunshine Component Index failed to hold above 9,900, closing at 9,870, down 35 points or 0.4%. Combined turnover for Shanghai and Sunshine markets was 1.0899 trillion yuan. The renminbi central parity rate was set at 7.2074 to $1, down 19 pips from Monday. Technical analysis. The Hang Seng Index fell initially but rebounded, closing at a new high since the sharp drop on April 7th, though it has not yet broken the April 15th high of 21,604. The 9-day relative strength index strengthened to 46, nearing the 50 midpoint. A break above 50 could push the index past 21,604 toward the next rebound target of 21,840, with support at 21,200. Blue chip earnings. China Mobile Q1 net profit was 30.631 billion yuan, up 3.5% year-on-year, with earnings per share at 1.42 yuan. Operating revenue was nearly 263.7 billion yuan, flat year-on-year. Communication service revenue grew 1.4% to 222.4 billion yuan, while product sales and other revenue fell 6.82% to 41.4 billion yuan. As of March, total mobile customers reached 1.003 billion, down 940,000 year-on-year. 5G network customers grew to 578 million, up 26 million from year-end 2024. Average revenue per user, ARPU, was 46.9 yuan, up 3.5% from last year. Broadband customers totaled 320 million, up 5.48 million year-on-year in Q1. PopMart Q1 revenue grew 165% to 170% year-on-year. China revenue rose 95% to 100%, while overseas revenue surged 475% to 480%. Overseas regional growth compared to Q1 2024. Asia Pacific up 345% to 350%. Americas up 895% to 900%. Europe up 600% to 605%. The U.S. Commerce Department announced plans on Monday to impose tariffs of up to 3,521% on imports of solar panels from 4 Southeast Asian countries. The proposed levies targeting companies in Cambodia, Thailand, Malaysia, and Vietnam are in response to allegations of subsidies from China and the dumping of unfairly cheap products in the U.S. market. Jinko Solar's Malaysia products face the lowest combined dumping and countervailing duties at 41.56%, while Trina Solar's Thailand products face 375.19%. Cambodian producers Honan Solar and Solarlong PV Tech, which did not cooperate with the U.S. investigation, faced 3,521% tariffs. The IMF downgraded its 2025 global growth forecast from 3.3% to 2.8% and 2026 growth to 3%, down 0.3 percentage points. The IMF noted that trade wars could trigger supply shocks in the US, raising prices and impacting productivity, while trade partners face demand shocks affecting output and prices. US growth forecasts for 2025 and 2026 were cut to 1.8% and 1.7%, down 0.9% and 0.4 percentage points from January. China's growth forecast for 2025 and 2026 were lowered to 4%, down 0.6% and 0.5 percentage points, respectively. US stocks rebounded sharply on Tuesday as US government officials expressed optimism about US China trade negotiations, expecting the tariff war to de escalate soon. Bolstered by strong corporate earnings, the Dow Jones Industrial Average surged 1,016 points or 2.7%, closing at 39,186. The S&P 500 rose 129 points or 2.5%, closing at 5,287. The Nasdaq climbed 429 points or 2.7%, closing at 16,300. The VIX Volatility Index, often called the fear gauge, dropped as much as 11.1% to 30.08. The Golden Dragon Index, reflecting Chinese concept stocks, rose 3.69%. Ahead of its Q1 earnings, Tesla stock gained 4.6%, Amazon rose 4.1%, Apple rebounded 3.4%, and Nvidia climbed 2.4%. 3M surged 8.1%, making it the top-performing Dow component. So far, 82 S&P 500 companies have reported earnings, with 73% exceeding expectations, providing significant support for the market's rally. Analysts expect overall S&P 500 earnings growth of 8.1%, down from the 12.2% forecast at the start of the quarter. Our stock pick today is Lepu Biopharma, stock code 2157. Lepu Biopharma is an innovative biopharmaceutical company primarily focused on oncology, particularly in targeted therapies and immunotherapies. Since its establishment, the group has been dedicated to developing innovative antibody-drug conjugates, ADCs, through a comprehensive and advanced ADC technology platform, aiming to create optimized, innovative drugs to better address the unmet clinical needs of cancer patients. The group possesses end-to-end capabilities covering drug discovery, clinical development, chemistry, manufacturing, and controls, CMC, and good manufacturing practice, GMP, compliant production, encompassing all key aspects of the biopharmaceutical value chain. As ADC candidates approach commercialization, the group has established and is gradually expanding its internal production capacity to meet business development needs. The group has strategically built a diverse oncology product pipeline, including 1 candidate in the clinical commercialization stage, 7 in the clinical stage, and 3 combination therapies in the clinical stage. 1 candidate has received marketing approval with 2 targeted indications, with clinical trials for other indications ongoing. Among the 7 clinical stage candidates, 6 are targeted therapy drugs, and 1 is immunotherapy drug. Lepu Biopharma has completed the full commercialization process and is currently experiencing rapid sales growth. Additionally, 2 products have successfully secured licensing collaborations through business development activities, with partnerships established with AstraZeneca and Arivan. For the year ended December 31st, 2024, the group recorded total revenue of approximately 367 million yuan, a year-on-year increase of 63.2%. Revenue from Lepu Biopharma sales reached 300 million yuan, 3 times the 101 million yuan recorded in 2023. Licensing business generated approximately 22 million yuan, while contract development and manufacturing organization CDMO services contributed about 45.5 million yuan. The group's Beijing manufacturing facility operates a 2,000-liter GMP-compliant bioreactor production line, primarily supporting clinical drug supply and CDMO services. Additionally, the construction of the Shanghai Biotech Park has been completed, with its R&D center now operational, further enhancing the group's capabilities in preclinical quality control and CMC research activities. The Shanghai Biotech Park's production facility has a designed total capacity of 12,000 liters and has obtained environmental impact assessment approval for monoclonal antibody and ADC production. Looking ahead, the group will continue to build or expand production facilities based on the business needs arising from the commercialization of ADC candidates. Recommendation: buy at 4.2 Hong Kong dollars. Target 4.6 Hong Kong dollars. Stop loss at 4 Hong Kong dollars. I do not hold the above stock.